Hello and welcome to the Business Standard Banking Show. Canara Bank standalone net profit jumped 90% during the Jan-March quarter to over 3,000 crore, driven by healthy recovery. Asset quality of the bank improved, while net interest margins expanded, albeit marginally. Satyanarayana Raju is the Managing Director and CEO of Canara Bank, is with us today to share the public sector bank's future roadmap. Mr. Raju, welcome to the show.
Thank you, sir. Thank you, Saha sir.
Let us start by asking you that Canara Bank has projected moderation in the credit growth in the current financial year. Is this because of elevated interest rates?
No, actually, the one thing I would like to recall from our earlier guidance to the stakeholders during the last year that we are given a guidance of around 8.5% credit growth last year, and we have achieved around 16.4% in the current financial year globally. Domestically, also we have grown domestic credit more than 15.01%. Whatever we give the guidance is a minimum guidance. It's not that that has been given as a target for that. All the guidelines, whatever guidances we are given, various parameters, whether it's a business growth or credit growth or overall it's a minimum guidelines. So even this year, as against the last year 8.5%, this year we are given a credit growth of a 10.5 minimum growth rate. That's a minimum growth rate, sir. But definitely we are confident that we are that at 12 to 14% credit growth will be there. We are not looking at that moderation in the credit growth because there is a demand. There is a demand both sides at the corporate as well as in the RAM sector. So we are expecting a good growth in the RAM. Even a corporate last year we have grown almost to 16 to 17% domestically.
Right.
The fourth quarter the growth is looking at little bit subdued compared to that other 3 quarters. The reason behind that is it's not that there is a moderation in the demand. Actually that the corporate, the organization as an organization, Canara Bank has taken call to grow at par with the RAM growth, since we want to maintain as a whole balance sheet as 45 to 55% a ratio between the corporate and the RAM sector to maintain the margins. Otherwise, there is no depth of business. There is a demand continues both sides in the corporate as well as in the RAM sector.
What is the share of corporate sector right now? In the
As on March, our corporate share is 45%, our RAM is 55%. But in the next 3 years, we would like to be our corporate at 42% and RAM at 58%. That's for next 2-3 years.
Now coming to deposit growth now, deposit has grown only by 9% in the FY23, despite the banks offering a special deposit schemes, etc. So what more you can do to beef up the deposit growth, and what is the target for deposit growth in the current financial year?
So if you look at that current financial guidance, sir, the overall growth of a balance sheet we are given at 10%, credit at a minimum 10.5%, but the deposit growth at a minimum 8.5%. So why we have projected a lesser growth rate in the deposit compared to the corporate? It's not that there is a tough task for the growing at the deposit. That's not actually the reality, sir. The reality is our CD ratio earlier, it was 2 years back, was 68%. So that gradually we increased it to now 73%. But in the next 3 years, we want to increase it to 76 to 78%. Because the present CRR and SLR, total together, it is only 22.5%. There is a scope to go CDR up to CD ratio up to 77.5%. That is like using your resources optimally. When the higher rate interest regime, mobilizing and keeping in your books, it will have its own impact on our margins, which we don't want to do. Under the low interest regime, there is a chance for deploying even overnight or in a money market or anywhere. But at the higher interest rate regime, the mobilizing the more than what you require and keeping in your balance sheet as a liquid cash, it will have impact on the margins. That's why we are growing slowly compared to the credit growth. We are growing at a little less than the credit growth. The purpose is to increase our CD ratio.
So you are very conscious about your margins.
Yes, sir.
Now you have projected that your margins could improve in the current financial year as compared to the previous year. I think the previous year the margin was 2.95%. At the same time, deposits will get repriced at a higher rate. What gives you confidence that you can improve your margins despite the deposit repricing?
90% of the public sector banks' term deposits are off in the bucket of 1 year, sir. That's the bucket. Generally, you find that. So these the term deposits. The another thing is under the higher rate regime, interest rate regime, the depositor at liberty to pre-closure his existing deposit and put it in that the higher rate deposit. He need not continue till the contract period is expires.
Correct.
So whenever in the higher rate regime is there, like a special schemes, what we offered earlier, 666, thereafterwards 400. Now the 444 scheme is going on at a higher rate of interest. Already more than 80 to 85% of our existing that bucket has been repriced.
So you are saying a lot of the deposits has already been repriced.
Repriced because that's no depositor wants to lose the money. Whenever such opportunity comes, he will not wait for the contract to be completed. He will do it in between of that.
So that gives you the confidence that your margins can improve further because a lot of repricing has already happened.
Yes, sir. That gives me a confidence that we are already reached a maximum of in the interest expenses.
Correct.
So the another side, our 49% of credit portfolio under the MCLR. That MCLR, it reprices only in annual resetting.
Annual reset.
Mostly 90% of that MCLR, the tickets, whatever the asset base is there, that will be resetting will be done on annual basis. So in that still there is a scope more than 40% to reprice at a higher pricing. So that gives us some cushion in the form of that. That takes care of my whatever we are projecting the higher NIM from 2.95 to 3.05.
Right. So on one hand, most of your deposits has been repriced, and you can get better returns on MCLR that is about to be repriced. So that is why you are confident that your margins would improve further. You were appointed a few months back, I think, in the fourth quarter, and you were telling us a 2-3 year roadmap on certain parameters. So have you kind of decided a plan for the next 3 years of the bank under your leadership?
Yes, sir. Actually, recently in the first week of May, our board has met for a strategic business meet. We had a meeting with the board for the 2 days, and it was discussed thoroughly along with the respective business heads and the field functionaries. We involved the circle heads, regional heads, and even the branch heads in that strategic meet. In that strategic meet, we freezed certain parameters for next 1,000 days. It's approximately 3 years. That 3 years roadmap has been fixed, and there we want to continuously grow at average business growth of 12%.
12%.
12%. That's actually the figures what we freeze. More or less, again, we want to achieve our CD ratio around 76 to 77%. That by the 3 years end. And CASA at this moment, it is 33%, which we are aiming in the 3 years, we want to reach at 38%. So that will help us in our NIMs to improve further. And our gross NPA and net NPAs, we want to bring it below 3% gross NPA. And net NPA also much below the 1%.
In the 3 years time period.
3 years time. And the return on equity, I want to share at this moment that just 4 days back, the Economist, British columnist, the magazine, has written a column on Indian banks, especially on the government sector banks. The 10 years back, what the loss-making banks have turned around and earning a huge incomes. They have quoted Canara Bank as because the highest growth rate in the net bottom line is the Canara Bank with 87% year on year.
Right.
Bottom line. That he has quoted that, and he also quoted that versus this, the Indian private banks are growing their bottom line at 15 to 25%. And globally, the return on equity, acceptable return on equity is 15%. As against that, this Canara Bank is giving already now more than 19%.
Another parameter I would like to ask you whether you want to improve is the provision coverage ratio, which is 69%, slightly less than your peers. So is there a roadmap to increase the provision coverage ratio also?
Yes, sir. Actually, we are sharing with our stakeholders always, including the technical written off. That's 87%. Now we have achieved it. Of course, without technical written off, it is at 68%. And here, what we have taken is we want to improve our provision coverage ratio, both including and the without excluding that, 75 to 100 basis points every quarter.
So say maybe in 1 year time, you will be comfortably above 70%.
Sure, sir. 100%. We are very much confident that in 1 year's time, we will be above 70%.
And finally, sir, if I can ask, is there any plan to unlock values from some of the subsidiaries, like the insurance or the mutual fund, or even the housing finance subsidiaries? Is there any plan to list them?
Yes, sir. 100%. Let me explain to you. First, our immediate focus is we know that the untapped potential in our subsidiaries. Whatever the actions we have taken for last 2.5 years, that has kept these subsidiaries and associates in streamlined, and it has started giving the results. Now, as on date, our value of these subsidiaries and associates is around 12,500 crores. So during our recent business conclave along with our subsidiaries and associates, we have given them an advisory to see that they have to work forward for the next 3 years, that this value should double that. That means we want to see our value, a Canara Bank value in our subsidiaries, at least not less than 25,000 crores. We are working on that direction. We asked them to prepare their business plans, keeping the value in the mind, and they are working on that. Again, among these subsidiaries, our major three subsidiaries are, one is Canfin Homes. The Canfin Homes, whatever the little disturbance was there last year, now it has been stabilized. New MD has taken over that, and he is well experienced. And the entire they are now with the help of the board, with the help of the parent organization, now the entire team is in the market for growing it. Look at that, the pricing of share price of that Canfin Homes in last just 2 months have grown from 520 to now it is rating at 650, 654, 655. That's the growth. Last just 2 months, you have seen that. That's the way actually we are confident that it will grow further.
Right.
The second one is, the bigger one is a Canara Robeco mutual fund. Last year in Indian mutual funds, the best performing mutual fund is Canara Robeco mutual fund. It's the statistics reveals is everything has been revealed. When you have such a good name in the market, this is the high time we thought that it has to come to the public. So we advised them. We have taken another stakeholder. We have 51%. Another stakeholder, Robeco. We also taken them into confidence. Finally, we both together as advisor their board to initiate to come out for the public issue. And it may take around 15 to 18 months to complete the formalities. I'm sure next financial year, we can expect that company to come out for the public issue.
Will Canara Bank continue to hold 51% post the public issue?
See, we will hold the majority percentage. I can assure you that. This is because we will continue to hold the majority percentage.
Not
we
necessarily 51.
Okay. So 51 means when you are going for the IPO, you may have to dilute it 1% or 2%, but both the stakeholders will equally dilute it to that extent, so that the Canara Bank majority will continue in that.
Right.
The second one is a Canara HSBC.
Right.
That is also now as a whole in Indian insurance companies, it's both embedded value or even premium collection or advances, AUMs, whatever the way you look at that, it's ranking between the 9th and 11th. There also we are doing a huge value on that. That HSBC also has agreed with us, and now we both have decided that this company also should go for the listing in the next 15 to 18 months.
Mr. Raju, thank you very much for speaking to Business Standard. It was a pleasure talking to you, sir.
Thank you, sir. Thank you, Saha, sir. Thank you.
And I wish you all the best in the remaining part of your tenure.
Thank you, sir. Thank you so much, sir.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.